Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to be talking about Bitcoin and the idea of smart money versus dumb money. So if you guys like the content, please go ahead and subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel in the description below. So one of the things I've been doing recently, as per popular request, is trying to just teach myself PineScript. I've never actually used it before, so that I could put a lot of the stuff that I make into TradingView, because I know a lot of people use TradingView. So I recently put in the primary logarithmic regression that's fit to quote unquote non-bubble data on the bottom, and then our kind of like our speculative bubble top band in red, which you can see at the top. Now, this I think is useful for identifying, the phase of the market that you want to be, DCAing in or out of the market. Now, this is not financial advice. This is just what I use. Now, you also must remember that regression analysis like this doesn't do a good job of predicting, say, like 10 years from now. For instance, if you had only fit data down here, well, then the regression model would have been a lot steeper, and it would have already predicted $1 million Bitcoin. But by continuing to refit it each market cycle, it kind of hones in on that that fair value line. And in fact, the difference between, say, fitting it to this point and over here doesn't actually change nearly as much as when you fit it from when you exclude this data and only fit it down in these two areas. So we're kind of honing in on where our fair value regression line is. So if I were to publish this, you have to remember that it would just be useful primarily for I would think the next market cycle. So this market cycle that we're currently in, taking us out, say, a few years. Beyond that, I can't promise anything. I mean, I can't promise anything regardless, but this is the general idea. Now, the whole idea behind smart money and dumb money. So, if you watch the channel long enough, in terms of what smart money is and what dumb money is. So smart money is it's entering the market well before a speculative bubble, like in these phases here when we're in our regression band. These are our accumulation phases. In these phases here, you can see them. They're pretty clear and obvious when we're in them. When we go into speculative bubbles, like you see here, and here, it becomes fairly obvious that we are in a speculative bubble, even though most people just choose not to believe it, and they think that, okay, this is the new normal for Bitcoin, or this is the next paradigm shift. But inevitably, every time we come up to this region, we retrace. And I'm bullish on Bitcoin just as, many of you guys are, but you also have to recognize if we come up into this region again, don't squander that opportunity by thinking that it just has to continue going up and up and up forever. So we know that there's a good chance we'll come back up to this band at some point. Just be ready for it when it happens. Now, if we zoom in, so let's look at the daily chart on this regression equation. If you zoom in, you can see that the top of the speculative bubble currently, the bottom range would be around $45,000 at today, and around $66,000 at the top. So if Bitcoin were to go to this today, I would most likely be completely out of the market. Now, the nice thing about this is that it does monotonically increase. So we would expect, as long as we continue on the trend that Bitcoin has been on for the last decade, we would expect that, obviously that our lower bound support will continue to increase, as well as our upper bound resistance area. Now, note that I did not fit the regression band to any data past the beginning of 2019. So despite the fact that I only fit it here, I think it's doing a fairly good job even at our current times. So note that our lower bound here, as many of you guys often ask about, is around 5,700. Now, obviously, we could dip below it. You can see we dipped below it down to the 300-week moving average in March. But this is kind of our lower bound. And the interesting thing about that is that it's also the 200-week moving average, more or less. It's right below the 200-week moving average, which is where the lower bound support line is. The upper bound on this is currently at around 12,500. So you can see that in 2019, we went into this shorter term speculative bubble, and then we came back down. So it's all about the rate that we get there. If we can slowly build up for a long period of time, like we did in the last market cycle, this is the smart money coming into the market, okay? Up here, this is the dumb money. Putting money into the market when you've already been in this accumulation smart money phase over here is just it's kind of short-sighted, and it's more gambling than I would say it's investing in a sense. In the same manner, the sharp increase here in the same way is also a speculative bubble. And it's possible could have gone up higher. The peak, if we had gone up, I should say if we did continue to go up, the peak at the bottom of the band would have been around 30,000, and the peak at the top of the band would have been around 44,000 or so, or 30 to 40,000, somewhere in that range. So the smart money, I think, is coming in when we're in the regression line, when we're more or less moving sideways, maybe slowly gaining value. The dumb money comes in once the run has already started, once that parabolic move has already started, whether it's a smaller bubble or a larger bubble. This is when the dumb money is pouring into the market, because they're waiting for some signal to tell them, okay, we're putting in higher highs, now I'm going to put money into the market. When really all along, the people who are putting money into the market down here, between $3,000 and $4,000, $5,000 and $6,000, these are the people that have already seen a 2x on their investment by the time the dumb money is at the earliest coming into the market. And the nice thing about this is that if Bitcoin goes to 100K and you're able to you're able to get, say, a whole extra Bitcoin because you were buying down here rather than up here, then this could be the difference of like $100,000. So the difference between getting this is absolutely huge. Now there's also when you talk about dumb money, you have to consider that this is when this is the phase where you really bring a lot of new people into the market, and a lot of those people end up sticking around to try to become the smart money. So if a lot of people get burned, if you entered the market up here in 2017. And now you've just been accumulating for a really long period of time, and you're wondering, when will it be your day to kind of shine and see those gains that everyone, kind of reminisces about. Well, we talk about the idea of lengthening cycles on the channel. We know that the time from, say, bottom to bottom is getting longer. I mean, if you just measure from, these points, you can easily tell that the time, to go from, say, each phase of the market cycle to the next bottom, this will be 18 months. The next one is around, this was 37 months. The next one is around, 47 months or so. I'm just loosely drawing these lines. So we know the general idea is that it's going to take longer and longer each market cycle, whether you measure it from bottom to bottom or if you measure it from, say, top to top. So that would be 29 months, and then the next one would have been 49 months. So we expect, right, the cycles to lengthen. So you might wonder, okay, well, are you the smart money by buying Bitcoin now? I still think that we are in an accumulation phase. I think that 2019, 2020, and a decent part of 2021 is just the time to accumulate Bitcoin. It's always possible, given the length of this cycle that we're currently in, the fact that we're likely not going to see a peak until, say, 2023 or so, that we will see some of these shorter term speculative bubbles that kind of come up above the regression line and then dip back in. So, think that this could easily happen, and I don't want people to think that just because we go up in the short term means that we then have to continue going up to, say, a $60,000 Bitcoin within a couple months. That's most likely not the case. So it's important to realize, what does the data suggest? And if you can understand what the data suggests, then it can help you to identify whether you're being the smart money or the dumb money. Now, smart money, I think, also doesn't care about whether you're getting in, say, at this point or this point or this point or this point. You're just dollar cost averaging through that market. You recognize that you don't know where the lows are. You don't know where it's, like what these short-term price movements are going to be. You more so write it off to, say, geometric Brownian motion, or say a random walk of the Bitcoin price, because short-term price movements of Bitcoin are often irrational. But it's the longer term, it's the macroscopic view that I think provides a more grounded perspective. So if you can stay diligent and resolute with your investments and just continue to dynamically DCA, which I talk about a lot on my channel, then I think, a few years from now, you're going to be looking back and not really caring that you maybe missed the exact bottom or something. You're going to recognize, I did the best I could with the information that I had. Now people are calling me lucky because Bitcoin's gone on to do another 10x or something, but it wasn't luck. It was a calculated investment where I understood the risk, and this is the reward. In the same manner, Bitcoin could have not done something like that. So you have to recognize that there's nothing is a sure thing. There's always a risk associated with anything. If you guys want access to this indicator, the main reason I haven't published it yet is because I noticed, and I don't see this, like this is on the BLX because it goes back so far. I don't really see it on, if I pull up a different, a different Bitcoin chart that doesn't go back this far, I don't see it. But if I zoom into this region over here, there's 1 week where I'm not really sure what's going on, but it seems like there's kind of a glitch on the BLX. I'm not really sure if I go to say like the weekly time frame, and show you guys, maybe someone who has a little bit more experience with PineScript would know, or maybe this is just a glitch. I loaded in my regression model and I see this glitch. I also Googled around and found other regression models, and I also saw the same glitch occur right here. You can see it kind of goes sideways for like a week or so before continuing on up. So if anyone knows, maybe you guys could just confirm that is also what you see. If you just load in a regression model, you see that there's some glitch going on sometime in June of 2011. That'd be great. And if it's not a glitch and it's on my end, I would like to know that before I say publish the script or the indicator so that everyone else can use. So do let me know if you guys know what's going on there. If you can just put in a regression model, whatever you want, and see if you see the same thing going on. So again, the smart money, it's coming in when the market is quiet, when it's mostly moving sideways, when you're in that disbelief phase. The smart money does not care if we go down to $6,000 in the short term or up to $12,000 in the short term. It's just an accumulation period for Bitcoin, and we're ultimately waiting for this move to occur, which will likely take place over several years. So this is the goal. And remember that the dumb money will likely be many of your friends, some maybe people that you've talked to them, you've told them you're invested in Bitcoin, and they're the people that are going to see the news when Bitcoin's back up in this regime sometime over the next few years, and they're going to be calling you up asking how do they buy Bitcoin. Well, I mean, I would say it's your duty to alert them to what the data says and to tell them that purchasing Bitcoin at any point in time is a huge risk, and purchasing it when it's up several, maybe 10x over the course of a couple years is even more of a dangerous risk. And at this point, it's just gambling. I mean, if you're buying Bitcoin in these regions, it doesn't mean you can't make money. It just means it's more of a gamble than it would be, say, an investment. And I think that's important to point out. If you guys like the content, I do have a premium list. You can find it at intothecryptoverse.com. We have live risk metrics. We have regression analysis on a Google Sheets dashboard. You get access to a weekly report and a weekly premium video. So do check that out. You can see the website right here, intothecryptoverse.com. And if you do want a discount, you can pay with cryptocurrency for 6 or 12 months, and you get like a 5 or 10% discount. So would love to see you guys join there. We have a few hundred people on the list. I do think it is valuable for the people that have joined. So to wrap things up, market is doing what it's always done. We expect to be just kind of in this band for a while. If we move up in the short term, business as usual. If we move down in the short term, business as usual. Just remember, okay, at the end of the day, we know that that bull markets. So we know that bull markets can make you a lot of money, but bear markets can make you rich. See you guys next time. Bye.